Hey guys, this is a market update. In this video, we're going to look at where we are in the Bitcoin halving and how long we have left. Cycles matter, cycles are playing out, and we'll look at the fundamentals driving this and then how exactly to play this, because we don't want to be taking positions at the top of bull markets. It's the worst time to get involved on the long side. So we haven't got long left before all of this is playing out. So we're going to go through some of the timings there, some other research about that as well, and then look at the fundamentals driving this. I'll leave timestamps below because there's a lot of different sections. Coming to the Bitcoin price, firstly, very, very bullish price action in my opinion. We're just kind of topping out a little bit right now, which is fair because we are essentially hanging out at a major resistance level. This entire thing, this entire box here is just a resistance. For me, I think the ETF being accepted probably drives us through it. You can see this circle on the chart is around Jan 10th, more or less, which is where many people expect the Bitcoin ETF to be accepted. Now, of course, if that isn't the case or it gets rejected, then obviously we are going to get some selling. A lot of this price has the ETF baked in at this point. And so that's, what, a couple of months away. It's very, very close. And so I doubt we're going to get too much to the downside in terms of price movement, as long as the market expects these ETFs to be coming in January. Any news to the contrary will drive us lower, of course. I think that's genuinely a great opportunity if that happens. But for right now, it just seems like the market is buying any dips and really buying any weakness. Yes, we're coming into resistance here. So we're actually forming kind of an ascending triangle, which potentially can play out for a bit longer. So around the first week of December, this could potentially break out if that carries on. But for right here, very difficult to break this price unless we have some very, very good news, or maybe something happens with the macroeconomic data, which will go over how that's going to affect Bitcoin right now. If you are a trader, check out Bybit though. I'll leave a link in the description. If you make a deposit and trade, you can get up to $30,000 as a deposit bonus on Bybit. You can check the other links below if you can't trade on Bybit as well. Everything is shaping up for this Bitcoin halving. So Bitcoin has a halving, which of course affects the supply and demand characteristics for BTC. However, Bitcoin is not a small asset anymore. I mean, it's small in the big scheme of things versus gold and other sort of asset classes, but it's definitely not like a 50 billion asset like it has been in the past, right? This thing is now 700 billion, and you have the eyes of the world upon it. Many people own it, and those people and hedge funds and other investors that own it, of course, make it react in price to the macro cycle as well. So let's go through that. Firstly, this is the Bitcoin cycle. We have not very long. Around April is the halving. Now, every previous halving has seen us just essentially go straight up to an all-time high after that in the preceding 1 to 2 years. We are very close to that now. In the previous cycle, you can see a massive upswing to the trend line and then a massive dump from there. Now, that was the pandemic. Many people are saying that we've had a good run, but when a recession comes, then we might get a big drop down as well. There's two outcomes in my opinion. Firstly, a recession causes a massive financial crash worldwide. That will see all assets correlate to one to the downside as people sell everything liquid for cash to fund their liabilities. That will happen. Then governments will step in and absolutely flood the market with currency again, driving us to a new all-time high. The second option is for a kind of slow rolling recession around different parts of the economy, which, pushes up unemployment and makes deflation in some certain sectors, and it would kind of roll over. No financial crash. What I think would happen there is just kind of a slow and steady rise of BTC, given the fact that the market also thinks that central banks are going to drop interest rates, potentially stimulate the economy, and you may get some more fiscal stuff or at least some jawboning from governments. So both of those outcomes for me, essentially during this cycle, sees us at a new all-time high for Bitcoin. In the middle, one of those things is going to happen. I don't know which one, and I'm not investing for that. I'm not allocating for that. I'm allocating in the strongest asset that is going to reach an all-time high, in my opinion, which is BTC. Time is running out because after each halving, we usually reach a new all-time high. And so, we are within that zone where you really need to be allocating if you're looking to buy Bitcoin and thinking that it will reach a new all-time high again. There's a lot to support that as well. So time is running out right here. April, and you've got January potentially ETFs, which could see us above this. For me personally, anything under this orange line is still dollar cost averaging and buying BTC. It depends on time and not price. For example, right here, we're looking at a 45,000 price for BTC where I'd be allocating. As we move into the halving, that goes up to like 48 or 50,000, right? And so anything under there is just obviously an automatic buy. Anything above here, you can make some decisions if you want to, reduce allocations, keep buying, or, even start selling. Now, I wouldn't be selling when we just break through this, but that's up to the individual. You can just have one of those examples. So I think we go much higher towards the end of the halving cycle. That is probably, 18 months to 24 months away from here. Well, I'll show you at the end of this video exactly when Pantera Capital think the Bitcoin halving will end. And these cycles are very, very predictable, or at least have been in the past. This is important too from cross-border capital. This is central bank liquidity, which obviously moves in hand with the Bitcoin price. And as you can see right here, we are coming out. So this massive drawdown in liquidity was this. And that's because Bitcoin moves with liquidity in central bank cycles. But we're moving out of this now, right? And that's because, as we can see, liquidity is starting to inflect to the upside again. So remember what's happening right now. Interest rates moved up. That was the drawdown in Bitcoin. Now we're seeing a potential peak here. The market at least thinks that, and a potential move down in interest rates. Why are interest rates moving down? Because the economy is weakening. Economy is weakening, unemployment is rising a little bit, inflation is coming way down. Central banks are easing, China is, and Europe will be soon, and then later in the cycle, potentially America. So this is where we are, right? We are not in the drawdown anymore. We are in the recovery into normality, and that is the recovery of the Bitcoin cycle as well. And remember, Bitcoin reaches new all-time highs if the network is growing bigger. We've seen active addresses are very, very strong. The ETFs coming, TradFi getting on board. It doesn't feel like Bitcoin's actually going down in size as a network, right? So everything is coming to a head right now. Peak rates, economy weakening. Next phase for central banks is easing and supporting, or at least just moving away from their very, very hawkish stance to something more normal. And you have an asset that is growing at a faster rate than other assets. So what is going to outperform versus those other assets? It's probably Bitcoin. So what we're going to look at is the Bitcoin ETFs as well. So 10th of January is the final deadline for ARK Invest. Everyone thinks, the analysts and lots of other investors think that the 10th of January here, they have to deny or accept ARK, that they will all be accepted or denied. If they deny ARK, then all of these are going to be denied as well. But if they accept ARK on the 10th, they have to accept all of the others because otherwise they'd give ARK an unfair advantage. That's what the prevailing consensus is right now. That's why so many people are looking for January the 10th as kind of the date when they actually say, yes, we'll accept ARK and therefore all of these others, as long as they have their ducks in a row, which seems to be happening more and more. It's not far away, and so I don't know if this is going to be the deadline or whether they'll maybe push it further and say we need some more info from issuers. That's going to be, we'll find out on January the 10th. But in any case, I don't think it's major. I think Bitcoin will still grow during the cycle because of the fundamentals and the macro cycle. You can see there are nation states now mining Bitcoin. That's why the hash rate is going like up to the moon. So you now have the world's energy producers coming on mining Bitcoin. We now know that nation states and sovereign wealth funds have Bitcoin. They mine Bitcoin, they earn Bitcoin, hash rate going to the moon. They want to bring it on. It's an opportunity for them. So this is the fundamentals that are driving us. The ETF's like a small thing now. I really just see it as kind of like, yeah, that's going to happen. You can see Pantera as well. They actually think it's buy the rumor, buy the news in terms of the ETF. And here's why. The existence of an ETF is very important in Bitcoin becoming an asset class. Once an ETF exists, if you don't have an exposure, you're effectively short Bitcoin. Yes, I agree with that. But again, let's just say Bitcoin is the signal. That's the thing that's going to keep growing. And all of these the way that people treat Bitcoin is going to be good at some points and bad at others. But generally, Bitcoin, if it's a stronger asset, is going to outperform. You can see the Bitcoin 4-year cycles here. This is from Pantera as well. If past performance was a predictor of the future, which it isn't, so keep that in mind, the rally would last until November 1st, 2025. So you can see the cycles are extremely predictable. So you have a bull market of 1,000 days, 1,000 days, 1,000 days, bear market of 300 to 400 days. We're out of that bear market. We now have a 1,000-day bull market in front of us, more or less. So use this as a timeline in terms of where you're looking to allocate and go into risk, and maybe times where it's not. Towards the end of a bull cycle, you really want to be looking at either taking profits or scaling back, rather than going all in and trying to allocate towards the top of a bull market, because we know how it works when everyone allocates and then suddenly the whole thing obviously deflates again. So Pantera have November 2025 for the end of this cycle, which would be this date right here. So that's what people are trying to trade, and they're taking their positions now. And as the trade gets more consensus, there will be less juice in that trade if you're trying to trade one cycle. Once it becomes completely consensus and everyone is getting involved, that's when we head down towards the bear market again. But we are essentially now looking at a 1,000-day bull market according to Pantera from right here. So hard not to get excited and anticipating all of that news. 20 to 30% drawdowns are typical in bull markets for Bitcoin. ETF bad news, financial crisis, that can all happen to drive us lower. But the general trend of Bitcoin is higher, and I don't see that stopping anytime soon. If you're a trader, check out the Bybit deposit bonus down below, up to 30,000 as a deposit bonus there. I'm James, this is Money's EG. Cheers for watching, and I'll see you in the next one.